Hi guys, it's Forte. It's May 11, 2023, 9:19 p.m. This is a very different type of video. I'll talk about the market and, stocks later on in the video, but this video is more about my trading philosophy, something I want to share about, with you guys and some of my background, right? And how long I've been trading. How has it been? And let's get it started. I've been trading pretty much since high school days, right? I am 26 years old as of this year. Now, high school time, it really didn't count as trading. Just, I was just looking at stocks, buying here and there, like everybody else. And I remember in high school, there was twice that like this, they had this a mini investing champion, basically. And you know how classes are, I think it was quartered, semester based. I don't remember, but it was like split in 4 quarters, right? And at the end of the quarter, we'll see who will make the most money. And they did it twice in that 1 year, and both time I came out to be first. And even not professor, sorry, my teachers were curious on what did I do, and I showed them my account. It was really simple. I put all, like, everybody had it's a simulation account. Everybody starts with $100,000, and what I would do is put $100,000 in one stock, and both times I won. And that pretty much builds into today's my way of trading in today's world. It's more solidified. Back then it was a mess. It was a guess, flip a coin, and I got lucky twice, right? Now I'm getting lucky, but at the same time trying to reduce that luck and turn it a little bit more into skill. There's still a lot of luck, I believe, because my win rate is not as high as some of you guys might think. And that happened. And then going to college, got interested in crypto in 2016, 2017. And then because of that, I got into trade looking at stocks, right? And then around 18 is when I started trading. Very typical stuff. I think that's how a lot of people get into trading nowadays, is through crypto. A lot of young people, at least. That was at least how I got into it. And I'm looking at OBS right now. My forehead is getting bigger. As I trade, my head's getting bigger. Thank God I have good genetics. My hair isn't being lost. But going into 2018, that's when trading got started. 17 is when I got started. 18 is when I start to lose a lot of money. And then here and there, I was also working part-time job. And I was going to college at the same time. And in 2019, I quit my part-time job because I was able to make quite a bit of money from playing options. In 2018, I made quite a bit, and I didn't have to worry about rent. I was pretty much going to school and just trading in the morning on Robinhood. Pretty funny, huh? And as 2019 and 2018, 2020 was obviously a great year. That's when I started making my YouTube video and my Twitter. And then, I thought everything was going great for me. I had all these things I wanted to do. My future goal was all written out. I was like, I'm going to do this. And it became really realistic. And then 2021 came, and it was like a slap in the face. I believe many of you guys have probably never experienced that if you started trading after 2015, right? Before, well, we started trading in like the middle. I started learning in the middle of a huge bull market, and then towards the end, I was able to, 2021 was a slap on the face, though I didn't have too crazy of a drawback, thanks to all the books I've read. Especially on the one about Jesse Livermore. It's the remnants of the stop operator, and the book by Mark Minervini, the book by William O'Neill, how to trade, how to make stock, and all the Market Wizard books, they were phenomenal by Jack Schwagner. They all emphasize how important it is to take a loss. Now, 2019 and 2017 to 2018 to 2019, I was able to not work at a part-time job because I was taking ginormous risk and making ginormous amount of rewards. This way, I didn't have to work, right? I was making a lot of money as a student. I remember one morning, it was 2019, if I recall correctly, October of 28 or something. I'll double check my date, I might be wrong. I was like trading Roku in the middle of my class. It was 10:15 in the morning, and I was racking up like $27,000. And every single second passed, a couple of thousands of dollars were going up and down. It was phenomenal. It was a lot of risk, but at the time, even though the risk wasn't that much because it was a lot of profit cushion. But looking back right now, I would probably not stare at it as much, and because I actually, it was not that if I had a good plan, I would be able to make more money at the time. That's what I'm saying. I actually missed out on a lot of profit. I didn't lose money, but because I stared at it so much, I was losing out on a lot of profit. Now, in a bear market, that will be opposite. In a bear market, I will be losing a lot of money instead of losing profit. So I was really fortunate. I was not skilled in any way or sort. I had a basic idea of taking a stop, and that was it. And I got extremely lucky. Luck played a big role in my life. Luck is what sent me here. And I've realized that luck doesn't work when a bear market comes, when the thing starts to get tough. And that's when you really have, but that's when you really have to, that's when you have to understand. If you don't quickly, change yourself and adapt and start to get an idea that whatever I was doing worked, might be because I was lucky. It was not because I was good or anything. If you can realize that, and that's what I did. I realized that pretty early on. I was able to control myself. I think the biggest not red flag, but the warning I got was in the April of 2021 at the last, not April, sorry, March or April, I forgot, one of those months. I remember looking back, I lost $28,000 in not 30 days, by the way. That month I only traded like a couple times, and those couple times I lost $28,000. That was when I realized, okay, let's wake up, let's stop, because $28,000 is a lot, right? I'm 26 years old. You guys can. I'm not gonna tell you guys how much my net worth is, by the way. It's not that I don't want to. It's because I don't want people to have an idea of what kind of person I am based off how much money I have. But $28,000, just think of this. Think of it like this: $28,000 for a 26 years old. That's a heck of a lot of money. Somebody who just came out of college. Oh, sorry. At the time, I was not 26. I was 23, 24, right? 23, 24, losing $27,000. Doesn't matter how rich I am. Doesn't matter how poor I am. Losing $27,000 as a concept, that's a lot of money. Growing up, I was never rich, so that was a big smack in the face, right? And then that's when a lot of reading started, and a lot of reading started. And I started reading book by Sis, the Japanese trader, his philosophy. I started reading a book by Kimu. He's another Japanese guy. He's a day trader. I was trying to understand. I can speak many languages, right? I can speak English. I can speak Japanese. I can also read both. I can also actually read Chinese. I can also read a little bit of Korean. And there's not a lot of Korean traders as far as I know, but there is a lot of Japanese individual traders. Due to, I think, American influence since World War II, Japan is very capitalistic. kind of like more similar to America. And China, despite the fact that it's a country of socialism, it's a country that's hard for an individual to become successful as just one individual. There has traders coming out from it, and the biggest lesson I learned from them is that they have a lot of common things. By the way, America, Japanese, Chinese, whatever trader in the world, they all say the same thing over and over, which is to win big when you're right, and know when to buy, and know when to not buy, when to sell, when to not sell, and always call your loss. Now, when to not sell, when to buy, these are basically them saying that always have a rule, and always call your loss, and always understand that rule and risk are pretty relative. That's when I started reading Bruce Lee's book. It's a Hong Kongese book. It's called, I can't pronounce it too well. It's Jeet Kune Do, I think. I'm sorry if I butchered that probably. It's called the Intercepting Fist. And I incorporate that a lot into my philosophy of trading nowadays. Now we're really talking about my philosophy. And for me, okay, trading is trading to trade and trading to not trade. That is trading. Now it's gonna get, I know it's getting philosophical, you might not understand. It's simply saying that to trade, to buy a stock, you buy a stock. But to trade, to not trade, what I'm saying is that not trading is trading. To trade, to not trade, to be able to understand why you're not taking a trade, to be able to understand not trading is trading. It's not as deep as you think. It's simply how he puts it in martial art. It's a way to express yourself. It's not a way to, like, in for example, like a karate or any sort of kung fu tournaments. There's a set of rules, right? In trading, in the market, there is no set of rules, right? So I cannot follow these rules and give you guys these ways of fighting. There is no rule. So you have to be able to just do what you gotta do. Buy to buy. When you're buying, you must buy. You cannot force yourself to buy. You cannot force to punch someone. You punch someone when you're forced to punch someone. That punch is not going to be as deadly as you punch just to punch. When you're about to make big money on a trade, that's how I know that I'm going to be making money on this trade. Is when I execute that trade, there is no thinking involved. It just happens. There's no doubt. I put my buy order in, I set my stop, and I do what I need to do. I look at it, and things just happen. That is a good trade. David Ryan once said he doesn't day trade, doesn't swing trade, he doesn't like to make too many buys. He likes to buys it, and just doesn't do much intraday trading because he said that it is quote unquote too much decision making. That is basically what I'm saying. You don't want to make too much decision. Now, that's also contradicting to what I'm saying, because if you have this thought of not doing as much, that itself is doing, right? You need to be able to not do and do as much by just letting it happen, not by not thinking. You don't want to think when you execute a trade. You want to feel. This might sound a little bit cringe, but it is. That's what it is. Do you ever try to walk when you got out of a bed? You might try to get up because you don't want to get up. But when you're walking, let's say you already are awake, and you're walking from place A to place B, for example, from your bedroom to your living room, are you trying to walk? or are you walking just to walk, right? Now that is something you don't learn. You don't learn how to walk from reading a book, right? We learn how to walk since we're babies. Our parents let us do it. We first crawl on the floor like a little, like an animal. And then we start trying to get up. Our legs are shaking, but we're standing, and we start walking. After we learn how to walk, we start running. Now, this is not we don't get that from reading books. Books can teach you how to walk prettier, how to have the right posture, and then you practice it. You have to practice, or else you cannot have a good posture when you walk. You have to be able to just walk and learn how to walk and fall. And then you'll eventually develop into this habit of walking. Same thing with trading. You cannot learn from a course. You cannot read a book. You cannot have somebody teach you how to walk. You have to trade. Sorry, not walk. You have to trade. You have to trade to be able to learn how to trade. You need to trade as if you're breathing. Now that is profitability. Money comes when you can get there. And every so and often, I fall. I am, trading couple years? I'm still a baby. There are Wall Street super managers, super traders out there, been trading for 20, 30 years, and they fall too. But they don't fall as hard, right? Because every so often, even in the real world, you might trip on something and fall, right? But they know how to fall. They know how to fall to not injure themselves. You need to learn how to lose. Everybody wants to learn how to win. But nobody wants to learn how to lose. And if you don't want to learn how to lose, you will never be able to win. Because losing and winning comes hand in hand. Whenever there's a winner, there is going to be a loser, right? Now, you have to learn how to lose. Because in the end, we want to win, right? Winning is the ultimate goal. Sorry, not winning. Sorry, making money is the ultimate goal of trading. And in my opinion, making money is equivalent of winning. I'd rather trade 1,000 stock and only win 30 of them and make money than buying 1,000 stock and win 500 of them. Then I can make money. I'm not a big fan of comparing win rates, because there are super traders out there have 10% win rate. The best Japanese trader has 30% win rate. It's not about win rate. It's about, are you making money or not? And trading, in my idea, it's simply that. Are you making money? It's about making money. It's not about winning, right? But whenever there's a winner, there's a loser. You gotta learn how to lose. You have to get used to losing. You have to get used to falling. If you don't get used to fall, and then you fall next time, you fall in a different way, your head gets hit, and you have a concussion. That's no good. You need to be able to fall on your back, fall on have impact on areas that's not a part of your joint. That's how you fall, right? When you're trading, you want to have when you're lifting, you want to have good posture, or else there will be injuries in your body. That's the same thing as trading. You have to, in order to be liberated from losing, from inability to be profitable in the stock market, to be liberated from that, one has to learn how to master the art of losing, right? Now that is hard. Because once you can do that, you solve the problem. You have to learn how to lose. You have to understand yourself. Don't try to increase your win rate. Try to do that after you learn how to fall, how to lose. For example, you take 10 trades, you lose 9 of them. Now don't try to increase that win rate to 20%, to 30%. Do that last. Instead, learn how to lose less when you take those 9 trades, when you take those 9 losing trades, learn how to lose less. Because by doing that, you'll be able to limit your downside and increase your upside when you only win that one trade, right? Well, if you have a 10% win rate, there's very limited amount of stocks you can trade. Now let's talk about math. Because you have a 10% win rate, you have to make 10 to 1 to break even. Not a lot of stock have 10 to 1 ratios, risk to reward ratios. So you're gonna have to be really, you have to learn how to take trades that give you that kind of 10 to 1 ratio. And that is my philosophy in trading. That is what I learned in the last couple of years, and that's especially after these 2 years, you get to understand yourself a lot. You get to understand your trading a lot. You get to understand what kind of trading do you want? How do I want to express myself in trading, right? If you, I got into trading because of money, because of the freedom. I still, in a way, am doing that. Secondly, I am more treating trading as a way to express myself. Am I able to produce explosive returns? Because that's how I want to express myself. How do I do that? That's something for me to learn as we go. Now, that's pretty much it. I'm sorry if it got too philosophical, but if you don't understand this video, go ahead and tell me. It's fine. I'm not gonna make these videos too often, but yeah, and trust me, I am not high. And let's take a look at the market real quick. The market right now is obviously having a pretty flat month for like a while. A lot of people on Twitter are talking about debt ceilings. Breadth is doing bad and all that stuff. Now, I think of it differently. If the breadth is doing bad, why the heck is the index acting good? The index are acting good because the big caps are doing well. The mega caps, Microsoft, Google, AI, Apple, why are they doing well? Just because now people are saying that because they're doing well, that's keeping the market up. That's a bad thing because you want the overall breadth to do good. I kind of disagree. The reason why Google, Apple, and Microsoft are doing well is probably because they have a way to do well in the economy that we're in. If they're able to do something well, those big caps, I have no doubt that sooner or later we're going to see some great smaller cap setups. The reason we want to trade small cap because most of you guys, including me, we have small number of funds. We don't have millions of billions, hundreds of millions, thousands of millions of dollars. We don't have to worry about liquidity issue. And small cap stock is what really drives big movements. And mid caps too. Mid caps they're pretty good. Not a lot of small cap setup right now, so there's only mid cap. Now, just don't even look at the market. A couple mid caps I have in my hand is Duolingo. This stock is I bought the stock. I was really in the zone when I bought the stock. I was like, this stock has overhead supply, but we have made 3 different lows right here. And then, pretty much you can see that as I think it's pretty, whenever a stock make 3 lows undercuts a previous low, I see that kind of as a reset for the stock. The overhead supply here, is going to matter, but it might matter. But as for right now, it's not too big of a problem since we have already broke through this area of supplies. The stock is currently now up about 126% since the low that it has made. I bought the stock here, got kicked right here, and it was awful. And then I waited. I saw big volume on kicking, so I know that some funds were selling. But at the same time, I was like, if there's a fund selling the stock, more funds should follow if this is a severe issue with the stock. But instead, the stock was able to come back up. Second day this is the second day of trading. Excuse me. Got below the 50-day moving average. I bought the stock as it broke above this right here. the reason I bought it up as it broke above simply because it was about to break. It was getting really close to the 50-day moving average. It could be making a higher low and then come back down. That way I will simply be kicked. That's how I'll be trading it. But instead, this thing actually broke through the 50-day moving average. By the way, this was a really, really small position. And because obviously the potential of this being a higher low is very, very obvious. It's very possible. That's why I didn't want to risk too big. So I bought a small position here. As I break the 50-day, I had a 10% cushion of going to earnings. I decided to have to it because my position was so small. Even if the stock gapped down 20%, it wouldn't be too big of a hit. That's how small of a position I had. And as the stock broke all-time high, this may look a little bit extended, right? But the thing is that, is it really extended if you take a look at the weekly chart? Because if you look at the weekly chart, it simply looked like a shakeout. Yes, on the daily, it may be a little bit extended. That's why I am having it. I have a really wide stop to let it do something like this. You can go ahead and consolidate or go ahead and just go up, right? I am not going to do much. I bought the stock and I want to let it just do its thing because I have pretty much considered all situations for the stock. And that's what I call a good trade. So no matter if I lose money or make money on this trade, it's a good trade regardless. I say that myself. Yes. Another trade I have is called Duolingo and Wing, chicken wing. It's a chicken wing stock. Wingstop. This stock, if you guys want to know why I bought this stock, please go check out my Twitter. I have a in-depth description on why my mentality going into buying this stock. But pretty much in this video I'll tell you guys where I bought the stock. Bought the stock somewhere right there, and then added the stock here today, and that's pretty much it. It had an earnings gap, and then the stock gap up 10% but had a little bit of selling volume kind of came down, and I think maybe sellings are done, so I decided to buy some. My idea was that institutions wants retail to sell, their institutions are buying in, retailers are selling. It got to a point where this selling should have continued a little bit more to the downside because the volume is dying, right? But even with low volume, there is buyers showing up, which lets me to think that perhaps we're about to see something like this happening pretty soon. If not, I'll be stopped out. But yeah, that's the trade I have going on right now. And I know it's a long video. I know it's a bit philosophical, a bit of some of you may think it's nonsense. Here it is. Thank you guys for watching. I'll make sure to make some normal videos for you guys next time if I want to. Thank you guys for watching, and I'll see you guys next time. Peace.